Camila, let us go through this in Mary's paper, Waverly. This is a grade 10 paper. It was written in 2024. I will start with question one. Now, in our answer book, the general journal will be taking us 18 minutes to finish, and it will be out of 13 marks. And this is the general journal that we need to prepare. We need to refer to the information book for information relating to Nova Nourish Nutrition. Make the necessary entries in the general journal. Note narrations are not required. That is very, very important. They just told us that narrations are actually not required. Do not total the debtors control as well as the creditors control columns. Okay, let's go to the information booklet and read more about this question. Now it says that Nova Nourish Nutrition sells and delivers healthy and convenient meal prep kits tailored to individual dietary needs. Nova Nourish is owned by Ntembi Nova. The business marks up its products at 100% on cost. Again, they repeated that narrations are not required. And these are transactions for June 2024. G Swart, a debtor who owes 850, disappeared, and it was decided to write off his account. Now we're talking about the account of G Swart, who happens to be a debtor that was owing us 850. In this question, it means that we will never get that money back. Note that we already recognize the income in terms of sales from this entry. Now we will not be able to get that money back. So because we're not going to get that money back after every attempt we have tried to get our money back, we still did not get our money back. So we need to write off that account. So when you write off a debt as bad, two accounts will be affected. The first account will be bad debts, which is an expense. It will be debited because we are creating a loss. It is a loss. We'll never get that money back. Now, when we debit bad debts, we are actually debiting it because it is an expense. We are recognizing an expense. We are simply de-recognizing the income that we initially recognized from this. We will debit a new account, as I've said, which we call bad debts. I will write in brackets that it is an expense. And the amount that we're writing off is 850. The other account that will be affected will be debtors control, which is an asset account. However, we are going to credit the name of the debtor. That is because now the debtor will be owing us less, so it makes sense for us to credit the name of the debtor. And the reason for that is because a debtor is an asset and the asset is decreasing. Here, the name of the debtor is G Swart. We are going to credit G Swart's account by that 850. Please note that because G Swart is a debtor, the debtor's control column will be affected. Someone asked me this question as one of the subscribers under the comments. Why is debtors control and creditors control affected? They only get affected if that transaction affects a debtor or a creditor. Here it affects a debtor, and who's that debtor? The name of the debtor is G Swart. G Swart will be owing us less, so it makes sense that we credited G Swart's account, but at the same time, we are going to credit debtors control as overall we are going to be owed less. Or credited by that 850. Transaction number 2. Stock sold on credit to ELs for 400 was posted in error to VHALs. Correct the error. Now we sold stock to SLs. Because we sold stock to SLs, we were supposed to debit SL's account. And that is because this is a debtor. We sold goods on credit. That's how I know that SLs is actually a debtor. Instead of debiting SL's account, we debited VHEL's account. How do we correct it? You will correct this by debiting the correct error. These two people, both of them are our debtors. I am going to debit SLs because SLs is owing us more. We sold goods to him or her. And the amount will be 400. Because SLs is a debtor, debtor's control will be affected. We will debit it by that 400. In essence, I wouldn't even put it under debtor's control because honestly speaking, the net effect is actually 0. And this only affects each debtor's account. And then we are going to credit it's V health. Why do we credit V health? It's because that debtor was actually not owing us at all, as we did not sell goods to that debtor. We sold goods to SLs. So these two people, the reason why we are writing their names is because these are the debtors. Okay, both of them are assets. The other one is increasing and the other one is decreasing. Number 3, Baker Bros, which is a creditor, levied interest of 200 on our overdue account. They charge us interest. That also shows a weakness in our internal controls, as we cannot afford to be charged interest. Because they charged us interest, we are going to debit interest on overdue creditors. That is an expense. We recognize an expense. We are losing here. We're being charged an expense, which is a loss too. It is interest on overdue creditors, and the amount that we got charged is 200. As I said, we're debiting this because it is an expense. And then you will credit the name of the creditor, which is Baker's Bros. The reason why we credit him Baker's Bros, that is because this is a creditor, which is a liability. And as a result, we're actually owing them more. And the reason why we owing them more is because they are charging us interest. But at the same time now, Baker's Bros, guys, are a liability to us. And therefore, this will affect our creditor's control because Baker's Bros is a creditor. Creators control goes up on the credit side. I just need to specify that. Creators control goes up on the credit side and debtors control goes up on the debit side. That is because debtors control is an asset and creditors control is a liability. So we will record that under creditors control. Why is creditors control affected here? Because bros are a creditor. The owner, Ms. Nova, took food with a selling price of 2,500 for her own use. When the owner takes goods for personal use or own use, that will be drawings. So you always debit drawings whenever the owner takes anything from the business. This is because this reduces owner's equity. Okay, it reduces our owner's equity. Owner's equity will always decrease on the credit side. And then we credit whatever the owner took. In this case, the owner took trading stock. We will therefore credit our trading stock as we are having less of that. This is an asset, that's why we're crediting it. We're having less of it. So when it decreases on the credit side. But at what amount are we recognizing this? Note that drawings will be recorded at cost price. So we are given the selling price here. So to get the cost price, you are going to use this formula where you'll take your selling price, you multiply it by 100, and then you divide it by 100 plus your markup. Okay, so the selling price here that was given to us, it is 2,500. So we'll take that 2,500 and then multiply it by 100 and then divide it by 100 plus the markup. And let me just go up to see what the markup was. The markup is 100, so it'll be 100 plus 100. Put this into your calculator and check how much it gives you. It should give you 1,250. Let's check. It is 2,500. Multiply this by 100 divided by 100 plus 100. This will give us 1,250. We will therefore recognize our trading stock at that amount, which is 1,250. Is debtors control or creditors control affected here? The answer is no. Why though? Because these goods were taken by the owner, it doesn't affect any creditor or any debtor. Let's go to number 5. Nova Nutrition, Nourish Nutrition was informed that SNAI, a debtor who owed 1,600 has been declared insolvent. Her estate paid 30 cents in the rent. The balance must be written off as irrecoverable. This is weird because now it means that we are having bad debts twice. Please note that when a debtor has been declared insolvent, it means that they won't be able to pay us back. We need to write off the amount that they're still owing us. And for this, we notice that the debtor was actually owing us 1,600 and we only received 30% of that. 30 cents is the same as 30%. Okay, 30 cents in the rent means that for each 1 rand we received 30 cents. And that tells you that for each 1 rand that was owed to us, 70 cents was actually not received. So how do I get that 70 cents? All I did was I took the 100 and I minus the 30 and I got the 70. So 70% will not be received. Out of the 100 that was owed, we only received 30 cents. That means that 70% will not be received. This 70% is what we call the bad debts percentage. To get it, you will take the amount that was owed by the debtor, which is that 1,000. You will take 1,600 multiplied by 70%. And that is because it's 70 divided by 100, because we were given the total amount, 100% of the amount that this debtor was owing us. Now, how much does that give us? 1,600 multiplied by 70 divided by 100. It will give us 1,120. So this will be our bad debt. We will not get it back at all. And let me just read that out. So we know that the 30 cents in the rent was actually received. That means it was recorded. The balance must be written off. So we only record the balance as bad debts. Again, here you will debit bad debts. The reason why we debit in bad debts is because it's an expense by 1,120. And then you will credit the name of the debtor, which is S. Snake. This is an asset account. Because that is a debtor, it'll also go to the credit side of our debtors control. I did explain that, right? All right. Number 6 says that A styles a debtor interest on her overdue account of 4,800 at 15% for 3 months. So we charged A styles a debtor interest on overdue account of 4,800 at 15% per annum. So how do we calculate interest there? You will simply take that 4,800 and multiply it by 15%. Please know that this 15% is per year. To adjust it, we need interest for 3 months. So you will multiply it by 3 and divide it by 12. And now this will give you interest only for 3 months. 15% is per annum. We just want interest for 3 months out of the 12 months. We divide it by 12 and multiply it by 3. Let's see how much that gives us. 4,800 multiplied by 15, multiplied by 3, divide that by 12. It'll give you 180. This will be interest that was charged to a debtor for 3 months. Please note that interest that we charge a debtor will be interest income. This debtor will be owing us more because we charged them interest. That is why this one affects a debtor cost. That is why I'm going to debit A styles, which is an asset the debtor will be owing us more. How much more? We actually just calculated this. How do I forget this? That is 180. So this person will be owing us 180 more. I'm going to put that on the debit side as well as on the debit side of our debtors control, as the debtor will be owing us more. This is interest on overdue debtors. Which is your income. Interest on overdue debtors will increase on the credit side. Last one, number 7 says trading stock with a cost price of 300 was given to the local primary school to raffle for their fundraising initiative. Please don't note that that is donations. Donations will increase on the debit side. It is an expense. Please note that donations increase at cost price. So here we didn't even need to record the cost price. I mean, calculate the cost price because it was given to us. They told us that the stock that we donated cost us 300. Then you are going to credit whatever was donated. Here we are going to credit a trading stock because it was donated. This is an asset. Asset go up on the credit side. That is why we'll have 300 on the credit side. Why doesn't it go under debtors control or creditors control? That is because in those two accounts, none of them was a debtor and none of them was for creditors. That is why those two are not affected. Are you happy? I'm glad you are. If you like to have more lessons, please check descriptions for more details. Otherwise, keep on subscribing, keep on supporting, buy stickers. And yes, I will greatly appreciate it. I will really, really appreciate your support. This was good. I hope you enjoyed it. Also,